Hello everyone, George DeSantis here with the look of the market for the week ending April 14th, 2017. And as usual, before we get into the charts, let's take a look at the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. So the first chart I'd like to look at is the chart of the S&P 500 showing us the regression channel taken from the Best Choice software. A couple of things to note. Since we had this run up between February and March, and the market made, S&P made that high of 2400 on March 1st, it started doing some regression back to the mean, and in fact it regressed all the way back to this 10% line. It's right now sitting at 0.6%, so one can consider this to be very oversold. The fact is that it can remain oversold for some time. Uh, it can go even lower, let's put it that way. So we'll wait and see how this thing develops, but it's only when we look at the weekly charts and some of the other charts, we can get some kind of an inkling as to what we might expect in the next couple of weeks. So let's take a look at the monthly chart of the S&P 500. Well, here's a monthly chart of the S&P 500. We saw on the previous chart on the regression channel that the market became very overbought, and that happened precisely on March 1st. And this is where we had that high. We closed, in fact, outside of the Bollinger Band with 2 standard deviations, and then we started pulling back. So right now we are regressing to the mean. That's one way to look at this situation. And we still have the Kalman filter, 4-period simple moving average, and above the instantaneous trend line. So the trend is up, and the parabolic is still below the recent bar, the current bar. So there's no reversal of the trend here. The monthly chart, the longer term trend is still very much in an uptrend. MACD pulled back a little bit, not unusual to see that, but there is no divergence. And at the bottom of the chart, Elder Force has been ticking down. But again, because the market became so overbought, it's regressing toward the mean. Let's take a look at a weekly chart. Now, before we look at the weekly chart of the S&P, let me just mention that we all know that there are significant, apparently significant geopolitical events concerning Korea, Syria, etc. And obviously, there's no way for us to, for me anyway, to evaluate the impact of these events on the behavior of the market. So all we can do is take a look at the charts and see what we have in front of us. Well, let's take a look at the weekly chart. On the weekly chart of the S&P, we saw that high of 2400 that occurred on March 1st, and then the market consolidated and in fact pulled back. So lost some, gave back some, right, and regressed toward the mean. And as Alex put it on Wednesday when I listened to his webinar, the market is now in the value zone. In other words, it moved from being overbought into value zone. The value zone I would anticipate is somewhere between the 9 and the 30, the 9 and the exponential moving average. The 9 is that blue line, that dark blue line, and the Kalman filter is the yellow line. So we're closing in that value zone right now. So we can hope, of course, hope not a strategy, but if this holds true that this is the value zone, perhaps we'll get a bounce from here. So that's the best we can say. The parabolic is now above the most recent bar, so it's possible for this thing to go even lower. I'm looking for the the instantaneous trend line to hold as support here, which is slightly above 2300, 2310 to be exact. Okay, on the instantaneous trend line. So we're looking to see if that will hold as support, and then perhaps we begin another move up. Now in the middle of the chart we have percent R still about close to the 80% line, and we have RSI again crossing below the 60% line. However, it's still in an uptrend. It's not way down here near the 40% line. As long as it stays in this area, we have an uptrend. MACD, yes, it crossed. The fast average crossed below the slow average, but there is no divergence, as my friend Alex pointed out on Wednesday. So we're still cautiously bullish, according to him. Let's take a look at the daily chart of the S&P. Here's a daily chart of the S&P 500. We've seen this one before. Last week I pointed out that we were in this squeeze here of the Bollinger Bands, and narrowing of the Bollinger Bands, the dotted lines, and we didn't know what direction it was going to go after the squeeze. The squeeze usually gets played out as a more significant move, price move either up or down, and well, we know how that played out. It went down. We came pretty close to that previous low of 23.22. We don't know whether this will hold as support. It might hold as support and we get a rally from here. In any event, if it doesn't, 2300 is the next level of support. So in the middle of the chart, we can see that MACD has been trending down since way back here. I believe that's somewhere in the early part of March, and it's still trending down, but we don't have a divergence. We don't have a real divergence here. So what we do have, it seems, is that bears are now less significant. They're not as strong here as they were here. So they are weaker at this point than they were before at this level, when this market made that low. So when we put it all together, perhaps we'll get a bounce from here. In any event, when we go down to the percent R indicator, we can see that that's oversold now. So being oversold on some of the indicators, and some of which I don't have on this chart, approaching the 23-22 previous low. Hopefully we'll find some support here, but it's quite possible we're hitting that 2300 support level. So we'll see how this all plays out. Let's take a look at the NASDAQ. Here's the NASDAQ weekly chart. We have the instantaneous trend line here and the Kalman filter, and we can see the 9 EMA. And it looks very similar to the S&P weekly chart. What we find here now is, of course, the instantaneous trend line is still way below the Kalman filter. And in fact, we've had some whipsaws around here because the parabolic was below, then it got hit here, then it went above here or got hit again, and now it's below the most recent bar. So the parabolic is indicating that on the weekly chart of the NASDAQ, we switched to an uptrend. You go figure that out, well, given what we've all seen here, even on these charts that we've looked at so far. So NASDAQ weekly, parabolic is saying switch to an uptrend. We can pull back some more though, because we're pretty far away from the instantaneous trend line, and we've got to get some kind of regression here to go back up. Now I was listening to Mark Chaikin, who has developed the Chaikin money flow indicator on his webinar. He believes that the institutions are not bailing out of this market, so we have an orderly type of pullback. If that's so, hopefully we'll get another rally from here. At the bottom of the chart, we have MACD slightly below the zero line, and also in the middle of the chart, RSI 12 is still just above the 60% line. So perhaps after this consolidation and minor pullback, the market begins to rally again. We'll see if I'm smoking something or if it's true. Here's a daily chart of the NASDAQ. Got to move a little more quickly now. We only have a 15-minute period on these videos. And as we can see, just like with the S&P, we've broken down below the instantaneous trend line here. And so we're waiting to see, do we find support here at this level, or do we go even lower? At the bottom of the chart, you can see that Elder Force is oversold. It's at the oversold level, just as it was here before this kind of a rally here, back up to this level. So let's take a look at something else. Quick look at another weekly chart of the S&P shows us that CCI, a commodity channel index, still holding above zero. And as long as it holds above zero, we're in an uptrend. So if we're in an uptrend, this is an orderly pullback. We should get a rally from the instantaneous trend line. We'll see if that holds true. And here's a chart showing us the VIX, the volatility index. It's now at about 15.96. So, and when it spikes up like that, it's usually time to be buying the market. Alex pointed it out on Wednesday. He said, we can take a look at the VIX and see sometimes it's time to buy the market when the VIX gets pretty high. 16 is not extremely high. We've had the VIX at 20 in their 20s, in the 20s. So that's not a given. Let's take a look at something else. And here's the impulse chart from the stockcharts.com. We can see the red, blue, and green lines, bars. And at this point, we have a red bar. Now, Alex was pointing out on Wednesday that in his opinion, we made this high here in March when we became very overbought. And as we saw earlier on our charts that we looked at, and now we're pulling back into the value zone. This is in this area here is the value zone. If you look down here, way back here, in 2013, all the way between 2009 and 2015, we had this uptrend, and every time we got into the value zone, it was a good buying opportunity. Check it out here. Check it out all the way up. Okay, again here and here. So hopefully we'll see this occur again. The value zone is now in play. So let's take a look at the daily chart. We'll see that on the daily chart we're also on a red bar, and of course the daily chart is going to look weaker because it's a shorter time frame, and we do have a downtrend. However, we're looking for support somewhere around this level, the 22 level, the previous low. All right, let's take a look at something else. And here's that chart showing us the percentage of stocks in the S&P 100 that are above the 200-day moving average. And we can see that it's now at 79%, hasn't really deteriorated much. Perhaps Mark Chaikin is correct in his assessment that, as he put it, institutions are not bailing out of the market. And the way he put it too was that the market rallied since March 1st by about 20%. And it's only down 3% since the high. So he believes that this market is going higher. Let's take a look at one last chart. And here's one last chart, the chart of the New York Stock Exchange, the advanced decline line. So you can see the advancing issues are surpassing the declining issues and still doing that. Now, in quick summary then, the longer term trend is up. We saw that on a monthly chart of the S&P, and on the weekly chart, which is the chart that we really have to make strategic decisions on, according to our friend Alex, and I believe so, we still have a nice strong uptrend. We've pulled back to the value zone, so pretty soon we should find opportunities to buy this market. And on the daily chart, of course, we've been in a downtrend, making lower highs and lower lows. However, we are coming close to reaching that previous support level, or previous low rather, of 23.22, and we'll see if we can hold it. If not, we will certainly go down lower. Have a nice evening, and happy Easter to you, and Passover to those who are Jewish, and it's a wonderful time of the year. Let's celebrate.